Hello and welcome to this week's What's Hot. Now, cast your mind back to April 2000, some 20 years ago, when there was bankruptcy-making bids for 3G mobile licences. Now, some £22.5 billion was raised in those auctions, but they also heralded the demise of many of the companies that were involved in those auctions. £22.5 billion. Well, let's come to the modern day, because that is a similar amount being bid for a part of one company. I'm talking about the US operations of video sharing app TikTok. Well, TikTok, as you know, has been given 90 days to sell its US arm to an American firm or face a ban in the country. Donald Trump has alleged it shares its user data with Beijing, claims that it denies. So, the US retail giant and Asda owner Walmart has said it will team up with Microsoft to make a bid for the US operations of TikTok. Well, staying in the States, and shares in video conferencing app Zoom hit a record high on Monday, closing at $325.10. Now, the firm has raised its annual revenue forecast by more than 30%, up to $2.4 billion. Well, Zoom has seen its revenues skyrocket as second quarter profits more than doubled due to the coronavirus crisis. So why is all this US-related news relevant? Because it is all about trends, the trends that are going to dictate and determine investor decisions. It's also about the infrastructure that support those trends and the politicians with little hands that they frighten. Well, it is the stuff of the silver screen and the fantastic, which brings me on to UK-focused, UK-listed share Cineworld. And read this post by Laid Back. It's on the Cineworld bulletin board on the lse.co.uk website. We're wanting to get back to the cinema, and the figures for freshly released movie Tenet is testimony to this. But like every good movie, there's a twist. With Chinese tycoons building stakes in Cineworld, could that building be meant for a takeover? Well, regardless, Major Tom Wan has done his fundamental research, and all the best seats in the house have already been taken. So let's turn our attention to ESG, not eServe Global, but environmental, social and governance, which is the ethical part of corporate governance, and one which online clothing retailer Boohoo is taking very seriously. As you can see here, the stock is back on the ascendancy. Well, the fashion retailer is facing allegations that workers in its supply chain were treated as modern-day slaves. It's not having that, so it's ditched some of its suppliers and it's setting up its own model factory to ensure workers are treated fairly. And finally, never bet against the feds. Now, this is a mantra which David Harbidge has given a great deal of thought to in his 1st of September blog. And here, David and I are in agreement. It's all about trends, which is how I started the beginning of this video. Well, to quote David, uncertainty surrounding the pandemic and its economic impact is likely to continue to dominate investor sentiment over the remainder of this year and into 2021. As ever, the stock market is looking beyond today's news and anticipating a future which is likely to look rather different as COVID-19 changes consumers' behaviour and investors' perspective. So cheers to that, David. Here's to the future. Until next week, the more immediate future, stay well, stay safe. I'll be back again, same time next week.